Alright, good evening everybody. Let's check in. So it's Sunday night, so let's just check in what's happened since Wednesday night. So there's been a big flush out in the market on Thursday, which everyone was screaming doom and gloom. It's actually, I read it was in the top 5 liquidity flushes since the start of the year. So in this bull run of this year, 2024, it was in the top 5, so that's a pretty significant move. But having said that, that was one that we were anticipating to move through this imbalance. So obviously, it was significant enough to rock a few accounts across the globe. So let's just put in a. It was 3 o'clock on Wednesday. It's when we were having. Move over one. 3 o'clock is when we were having the conversation about the moves coming up. And so as we can see, we've come down, we tapped, where's that one? So we've come down, we were expecting to flush out these bottom ones and tackle this imbalance below. So that was the bias that we had on a daily. This top that we had from 11 o'clock that we were talking about already is obviously still here, but we can get rid of that because that was obviously tapped during our conversations and it's come up. The high that was 65, the liquidity run of 65, 700, 735, that definitely got wiped, and there was that really nice flush where we had a really good run up. There was a nice topping candle there, just so let's get rid of that. It was a really nice top candle, a move of exhaustion, and remember we were also talking, which I never left there, I probably should have, there was that area of imbalance that was across there from on an hourly, there was that imbalance from there to there, which definitely got swept, where there's a lot of low order liquidity, so not many people put their orders in here because they tend to put their orders at the end of wicks. And that's where we want to move basically from wick to wick. Anyone who puts an order in the candle, that doesn't make much sense in that statement, but not many people put a lot of stop losses and orders in the middle of these zones because it just doesn't make sense. You know, there's not a lot of structure there because the price shoots up or shoots down. It like goes to the moon or nukes to the floor quite often in those areas, and it doesn't often make sense as to why price comes through there. Quite often the prices that sit in there are spot orders that are being placed at market as the price is moving through. So as we can see through here, this is a daily imbalance. So there has been a few areas, a few lines through here in the middle that you can see that have been of areas of support on an hourly basis. So here in our conversation back on Wednesday, that was an area of support which was mitigated. There was enough strength, enough demand in price to push it up, and there was obviously enough supply in this area. Where can I just pull up this? So in this last move, let's change the price to a point of interest short. Even though there's a little bit of overlap, you can see on those two hourly candles, 3 o'clock. Oh, no, I'm on the wrong side. 8 o'clock and 9 o'clock from Tuesday. There's obviously enough sell pressure, enough supply to push that market back down, which really fell through. So there was a lot of orders being placed, and there was enough selling to flush it out, which really flushed out that market. Actually, you know what? Let's keep that one there. Let's keep that imbalance, because that is one that we will be looking to be filled, because imbalances are generally where target will flood, price will flood through. They're not areas where price will bounce, but it's areas that price will travel through, because there's a lot of weakness, and there's a lot of there's a lot of weakness and not a lot of orders in those areas. So it's definitely something that sort of like vacuums, sort of like shoots in some instances. Alright, so we can also see we've come down, we've found support at the 63,547 mark, which is, you know, below 64,000. Quite often the line in the sand pretty much is going to be that 60,000. Like if we start to lose 60,000, that's an emotional state, and that's where people are going to start calling for 50, 53, 52,000, because there is a lot of flood through there. Let's get through there. But what we're doing is we are focusing on current liquidity levels being flushed. Obviously, our long-term bias is bullish, but we also have to keep in mind that we are still forming lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So we haven't seemed to have completely fulfilled this imbalance. This is where the daily sits from 63.09 until 64.550. So we have nearly filled this daily imbalance, and there's obviously been a massive shakeout because Saturday, Sunday has been very quiet. There is not a lot of movement. We've basically we've found support at 63,500, and now we've just basically come up and we've really consolidated into a tight range. As you can see, we've even broken, that was a daily liquidity point, another daily liquidity point. So we can really like tidy this up, because there was some serious moves in there that just really wiped us out. So let's just do a quick tidy up, and we'll just do 3 to the top, and we'll do 3 to the bottom, and then that just helps us watch where we're going. So there's our current liquidity. Let's just put we'll put an alert on the nearest. Price has come down and reached up, rejected. So we can put another liquidity point here. And that is the highest point. Let's just move that a little bit higher. That is the highest point, which is quite often the pivot point. So let's put that as our, we want to put 1 down. So that's our liquidity. This is our liquidity point, our liquidity grab. like to put that as just our, well, let's just set up a new one, and this one can be our liquidity protected high. So this just helps us stay within our range that we can sort of see. Obviously, actually, let's do this correctly. That is the range. That is the protected high. So as we can see, prices come down, formed a low, formed a lower high, and now it's come down again. So this is our, in our downtrend, this is our protected low. All within this imbalance, which is more than 3/4 filled. So generally a half filled imbalance can be enough to mitigate it, but we will just keep going and see how we go, see how it travels. So liquidity grab, liquidity zone. So this is, we are basically filling in the structure. So regardless of what our bias is, this is the structure. So it doesn't matter whether we think we're going up or down. These are levels that will be challenged and either rejected or respected. But they're so within this protected range of forming a lower high and a lower low, our bias is down, but regardless, once again, these are the structural levels that liquidity is sitting. Alright, so now let's move on to our daily. And so this will actually, because it's Sunday night, let's have a look at our weekly. Alright, so as we can see, we've got a high, we've got a low, potentially a lower high, which could either come down to retest and reject and just form and break a new higher high, making this the next higher low, or we could be forming, we could be breaking through. So we don't know. From the high of this week, the height of this move, we have come down to retest the 50% level at 0.5. Below the imbalance is the 618 level for Fibonacci. If we were to play the Fibonacci game, from the high of this wick to this last move, the 50% level retracement is this wick, is this low that we were talking about. The 618 is actually this $52,000 to $53,000 level that I mentioned just before. So that is a significant area. That is a genuine area where we do want to, if price gets down to here, it would be very nice to go for longs. It would be a great area to go long from. However, we don't know if we're going to get there, so that's fine. Alright, so let's just move on to the daily. So, alright, so the bias for this week is if last week was negative and bearish, basically we can consider that this week will be negative and bearish. Let's just tidy up and we'll compare this to our AO. So we are in the positive range, moving negative. So we are positive and bearish. And if you can see the SMIO, which leads the AO indicator, we are negative and bearish, and quite strong bearish. So there would need to be a lot of support to be found, a lot of buying action to bring in this week to be a bullish week. And with this candle, it's a general middle of the range candle. There's a little bit of wick at the top, there's a little bit of wick at the bottom. It's not the sort of wick that it's not generally the sort of candle that you would see a pivot on. It's kind of like a continuation candle, if you want to put it into some sort of class. But we're only looking at one candle in isolation, and we're just building up a little bit of a bias. So from the weekly, I am still seeing that this week will be a little bit bearish. Okay, on to the daily. Alright, so the last 2 days, actually let's look at the last 3 days. So the last 3 days we've seen that Friday was a big wick tail, bearish day. That's what filled most of that imbalance that we were talking about. And we've had 2 inside bullish days. Not strong, they've been very, very small like we talked about. If we look at the AO, let's just put this onto a larger instance. We are seeing divergence, so we are seeing higher lows. We are still seeing that we are bearish. We are bearish, we are negative, but it's not as strong. It seems like it's slowing. There could be a little bit of exhaustion just here, but as we can see, the candles aren't moving very far. So it's interesting to see that the SMIO is giving us a little bit of support. So let's put together our, you realize I'll just put this on the Binance chart. Well, let's put together a new bias. Let's get Monday bias. So we've got weekend candles. Actually, if you look at it, they're 2 double insides. Double inside bullish. So there's been no action going on. We've got the AO. Negative, bearish, and slowing. And then we've got SMIO, divergence, negative, we've got divergence higher lows. Let's put that in. We're negative, bullish. So I'm looking, I still feel that we are still going down. However, I do think we need to grab a little bit of, we will need to make a little bit of that chop up by grabbing some liquidity in this market. So we've still got prices here. So we still haven't grabbed up. Actually, with that candle, that's probably a valid area as I stare at it. This is a good liquidity area. See how prices shot up, wicked. Oh my god. To see how prices come to this wick, rejected, and come back up, caught a buy, come up over several hours, fell, mitigated, shot up back to the same price, and it's just mitigated back down. It's just really whipped, ebbed and flowed back to that. So that is interesting in that this is an area where there is a lot of selling pressure just there. So I think that is actually a point. Now I've come back at it from a second glance. That's an area, that's the closer area that I would like to put an alert on. So I'll put an alert on either side. Do a quick measure. Are we approximately a percentage apart? Not at all. We're 0.5%. Wow, things got really tight. Oh, there you go. Alright, well, if I went to... Let's get rid of that one. That. And then that would give us a percentage, because we don't want to play in less than a percent. We want price to move. Yeah, 0.95%. That's close enough to 1%. That's better. It's a better move. Alright, perfect. So, just to add to the biases, so we're still working on that daily bias. What are we looking at? Prices gone higher, so we've got higher, higher, and lower. We've got lower highs. So that's something to bear in mind. Lower highs, well, that has formed higher highs. And we've also got the same across our AO, which is our two moving averages, 5 and 34. Simple moving averages built on a histogram, thanks to Bill Williams. Alright, so I am thinking that we are going to take a short dip, maybe a little bit of a bullish day tomorrow, on Monday, but I think generally it's going to be a bearish week. And so that's where I'm going to place my plays and go from there. Awesome. Thanks for tuning in. Talk soon. Bye.